What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, I'm using a different computer, and it's kind of screwing me up. Because this little chat window thing, I was trying to get the chat window going over here in the corner. Having some issues with it. Maybe I can change. Oh, here we go. I think I can change this. Let's make it. What if I did that? Is that better? Yeah, it is. There we go. Hang on, guys. Doing some formatting here on the fly. AJ, how you doing? You guys know there's a little bit of a delay between when I say something and when you see it. So just bear with me. If it takes me a little bit to address things in the chat. And it looks pretty small right now in the window. That's got to be like even too small for anybody to see, right? It's got to be. Well, that's unfortunate. So if anybody has like a microscope on their computer screen, they can see it, right? But I wanted to find a way to get the live chat up because I could put the chat over here, right? I could put it over here. Uh-oh. I could put it over here. Uh-oh. And I can resize this and everything. And I could do it the old school way. And that might be bigger. That is way bigger. Get rid of this. Okay, we're just going to do it like this, guys. We'll do it old school. But the problem is every time I click, it's going to go back. So, and I want to keep this on top. I wonder if there's a way to keep this on top. I don't know. Anyway, all right. First, yeah, I want to answer some questions. Mr. Finch, I can answer that for you. Hang on, let's do this. I'm gonna get tricky over here. I'm just gonna resize this. I can't resize this? What's going on over here? Come on, man. You should let me resize whatever I want. Yeah, you do. There we go. And then I'll do the same with this so that we have the chat window up and it's all good. Right? Why don't you let them go? Okay. There we go. Although the chat window should be on this side. That's okay. All right. Let's first address why is Adobe down $4 per share since Wednesday. I'm glad you brought this up because this morning, first thing I saw was the Amazon news, right? So immediately I go to Amazon and I check it out. And if you notice, taking out today, so just ignore today. Ooh, yellow. I'm not doing yellow. Where's my... Yeah, I like this color. Just take this out. Ignore this, right? And you see the spike down. Breaks out through the floor and then is kind of struggling here with this moving average. Flirting with it. And then this morning, you get the big gap up on the Amazon news because they're buying Whole Foods. Crazy, right? So... But remember this, right? Huge down candle. This is that Friday, that nasty Friday sell-off. The follow-through on Monday a little bit, and then yesterday, right? Okay, so that's Amazon. So if you look at the NASDAQ, TechRec gets down. Monday even gets lower. Yesterday retest the lows, and now today it's still under pressure here to the downside. On the Qs, on the NASDAQ. And then if you go through really the FANG stocks, so we'll do Facebook, dive down, struggling. We already looked at Amazon. Netflix broke the lows yesterday. Hasn't been able to get off of the mat. Google, same thing, just above the moving average, but same scenario. So what's happening is distribution or selling on tech stocks across the board. All things tech. So that's having an effect on our friend Adobe. Prisoner of circumstance, right? Just kind of trapped. You just happen to be a NASDAQ stock, so you're going to get beat up. And that's what's happening here. It's nothing company specific. It's all about the overall market being angry with us. So that's why we're getting the selling in Adobe. And again, it's not just the NASDAQ, though. S&P 500's come down a little bit. Not as bad, though, right? The Dow, I think it's DJIA. I can get it. Yeah, there it is. The Dow hasn't been nearly as bad. Really not bad at all. Sorry, guys, coughing a little bit. I am totally allergic to Chicago, I found out. Didn't really have allergies my whole life until I got older. And now I'm allergic to everything, and it's weird. It's a weird thing for me because I was never like that. Anywho, so all things tech are getting beat up. And I've got these other stocks like Brooks Automation and my Momentum Trader just getting hammered. AEIS, I cut bait on this yesterday, getting hammered. I had a big gain, so that was good. So just anything semiconductor related is really getting beat up, except for our good friend NVIDIA. They just don't care. They're just on a different plane of existence. So it's troubling. I've been looking at the NASDAQ trying to figure out, what's really going on. So, of course, everybody's paranoid that, okay, this is the start of the big sell-off, right? And here it comes. But we've been looking for this big sell-off to come for a long time, right? I want to show you something neat with fib retracements and fib extensions. And we're going to talk about the NASDAQ a little bit here because it sets up our Adobe trade, give you some perspective. So this is on freestarkcharts.com. I'm just using this. I drew my fib, and then now I can go in and edit. And one of the things you can do, now, actually, this is how I'm going to do it. The way that they have this is kind of silly, that I have to do it backwards. But it's fine. Okay. No, because that doesn't even make sense. No, I'm going to do it my way. Sorry, I was just trying to make the numbers work so I don't have to enter negative numbers, but I'm going to have to enter negative numbers, which is stupid, but whatever. Okay, so to draw the extensions here, because it's on the other side of the zero line, I have to actually use negative numbers. It would be nice if I could just put the numbers in normal, but whatever. So what you do is you draw these extensions, so it basically mirrors on this axis to the other side. So you got to use negative numbers. So negative 38.2 on the NASDAQ, just about where we ran out of gas. Funny how that works, right? So here's a move higher, stalls out, retraces to the 38.2. So now let's flip to the other 38.2, and that's resistance. And sure enough, got into a little resistance and then failed. Okay. So now we've managed to pull back to the 23.6 of this move. And it's finding a bid. It's really funny how these fibs work. And you could draw on another fib here. I'm going to delete this one because this site gets a little wonky. Okay. Another fib here, and this one doesn't even look like it's being held, but let's see. I'm going to draw the 76.4 in here. That's another common one. Let's see where that goes. It's close. It's not exactly perfect where we're at, but you can just kind of see how these fibs come into play. Okay. But what does this mean? Well, it means the NASDAQ's under pressure. But if you zoom out, it's just comical. This is a rally that really started, and I should probably draw a nicer trend line than my little pink stuff there. And I could do that using free stock charts. But this is a rally that started a long time ago. It started a very long time ago. I wouldn't even argue it's that trend line. I would argue this one. Through here. Anyway, you slice it, guys. Still a very bullish move on the NASDAQ. And the good news is this bullishness here in the NASDAQ has been met with good EPS along the way. And if you look on Zacks, my boss Shiraz does a nice little earnings thing. Let me get the Zacks. We'll pull the Zacks up, and you can see what I mean. Ugh, big, ugly, out of focus thing there. Oh, Terry Ruffalo. If you scroll down further, there it is. There's Shiraz, and he does this earnings analysis every single week, which is pretty cool. And he breaks down the trends that have been happening in earnings. So he did this one at the end of last week. Read the full article, and there are the expectations for next quarter, which is great. And this is what ends up happening: is it always starts big, and then it comes down, and then it troughs. So we're still looking right now. Next quarter, 5.7% for Q2 earnings, but it breaks it down here, which is great. So this is year-over-year growth, and we can look at tech here, and look at last quarter, 17% year-over-year earnings growth in tech, which helped support that move higher. Now next quarter, we're only looking at 8.9%. And I know some of these are off the charts. Oil, 317%. That's because oil was so terrible for so long last year. But this is pretty neat. Then you can see he breaks out the S&P. X Finance, or X Oil and Energy, which we like because take out the oil because they were all over the place. But it does some cool stuff. So if you're ever bored, check out Shiraz's earnings stuff. I get a lot of data from here, and it helps out a lot. Okay, so moral of the story is it looked all right. So let's dig in a little bit here on Adobe. And this earnings picture has been pretty good as well. As always, the black line corresponds to the right y-axis, which is price. The little red arrows are earnings misses. The green arrows are earnings beats. And these multicolored lines represent the evolution of our Zacks consensus estimates over time. And you'll see that really Adobe has been just steadily moving in a positive direction over the course of the last several years. You do have this sort of disappointing drop here in EPS estimates, coincided with some negativity in the stock, but it then rebounded, trickled up with earnings, and then this huge growth number here certainly helped. And it's really been positive for the most part to the upside on the EPS front. So this has been pretty good. Let's look at the detailed estimates page. So it is a Zacks rank number 3 hold right now. They're going to report after the market closes on the 20th. So I believe that's what, next Tuesday? Something like that? Or Wednesday. Next Tuesday, right? Because FedEx and them are both going to report next Tuesday. So them and FedEx will both be reporting. So I'm going to try to do my morning after thing maybe on Wednesday. That's going to be tough, though. It's going to be tough. I'm flying back to Sunny Isles Beach on Wednesday. I have so much stuff I have to do before then. I have no idea how it's all going to happen. I have no clue. It's going to be entertaining. Who knows? Okay, so bottom 34% of our Zacks industry rank. I wouldn't hold that against it too much. Look at these revenue numbers on Adobe. This is fantastic. Year-over-year revenue growth at 23.82% for the current quarter. Next quarter looks like 22.73. Current year, 22.28. And next year numbers, 19.5. Very good growth on the revenue side. Earnings side looks the same. $39.48 for the current quarter, $31.11 for next quarter, $27.94 for the current year, and $27.21 for next year. That's right, Dean, nothing like home. I'm just going to click my heels a few times and wind up back in sunny Isles Beach, hopefully. Part of the reason I came back here, I still had an apartment in Chicago, well, in Skokie, and I was living down there because, I didn't know if it was going to work out, if I didn't like it or whatever, so I was hedging my bets. And then now's the time I need to get the remaining things out of this place, and I have no idea how it's going to happen. I'm going to be a one-man wrecking crew, I guess. Good news is not a lot of furniture here. I have like a computer chair and a bed. I'm just going to light the bed on fire. And the computer chair, though, I'd like to have because it's pretty nice. I got this a while back. Office Depot had a sale. The consensus estimate trend here, nothing, man. And that's because the analysts haven't made any moves. They haven't really been courageous enough to get out here and say anything like, yeah, they're going to move. It's going to go up. It's going to go down. No, nothing. They're just kind of, mum's the word when it comes to analysts on Adobe. And, haven't seen a lot of action. Even here, so we've got, a new estimate from Griffin Securities, but they didn't even change anything, right? They just kind of came out, did nothing. Meh. Didn't really move the needle. So that's the game plan. That's where we're at for Adobe here. All right, let's go ahead and dig into this options chain. I didn't even bust out my calculator, did I? Where's my calculator? I don't have my good keyboard with me either. Let me tell you, man. Oh, I lost it. You're like a fish out of water when you don't have your fancy keyboard with you. It's no good. I like my keyboard. Oh my goodness. No, I don't want you to be that big. Oh, see? Anyway, I'm going to start yelling at this thing. All right, so we got to look at the June 23rd contract. Let's go side by side. And I know this probably looks really tiny on the screen right now, so I apologize for that. But let's look at the 137s. And the other thing I want to do here, I want to make sure that this has me on that. So I'm going to flip to the front week and then go, see, whenever those numbers are too small, I go, that doesn't make sense. There we go. Okay. That makes a lot more sense. All right, so the at the money call, 350 by 365. Let's call it 357. The put side is 340 by 360, so we'll call that 350. So they're expecting about a $7 move here out of Adobe on a $1.37. Talking about 5.1%. Okay. Let's see about 5.1%. Okay. Now, unfortunately, I don't have my fancy software on this computer yet. Stupid Dave. But we could do it the old-fashioned way. And the old-fashioned way was we would eyeball these bad boys and go, okay, it went from 121 up to 134, 137. So nice little move there. A great move here also. Sideways action to the downside a little bit. Nice bullish move. Slightly bullish move. This is when things got a little wonky. But for the most part, what you get is that good old post-earnings drift. So I think we're going to go a little old-fashioned on this too. And take a look at some of that. So let's go out to the July contract. Mr. Finch, I believe that we were emailing about this earlier. One of the problems here is that these strikes have yet to fill in. So we're only getting the 10s, the 15s, the 20s, and it's limiting us. And as I told Mr. Finch in the email privately, I'll let the rest of you guys know here, there is no shame in going a week up in order to catch more strike prices and more options, even if the open interest isn't necessarily there. Oh, Mr. Chumber, it could take anywhere from the entire quarter. It could take 2 weeks, 3 weeks. The initial sort of movement, I like to see within 2 weeks. Sort of that initial earnings drift, right? Because you can get a shock to the downside where the market whips around and then people kind of forget. So the perfect example of this actually would have been any tech stocks that reported last week, right? Because you get the market that is just overbearing and has a tendency to slap these things around in one direction or the other, and then the market kind of settles, and then you forget about any sort of risk event, and then you go, oh yeah, this thing had good earnings, and then it starts to trickle. So I would say within 2 weeks, so 10 trading days, I want to see that start to happen, and if it doesn't, then it likely won't happen, okay? In 10 days, like I said, that's not when it's all going to take place. Like, that's when you need it to start, and it will go in some cases for the remainder of the quarter. Because if you think about it, the major risk event is earnings, and then once you get that out of the way, what else is going to push the stock one direction or the other? Most of the time, the stocks take their cue from that earnings report and then go ahead and move. Okay, so let's look at this July 14th contract because, and again, looking at the open interest right now, it's like, well, why am I messing with this, right? But you'll note that this will fill in with liquidity later. But most of the time, these market makers, as long as you're not getting too far out of the money, are going to be there, and they're going to be accommodating. So if you go sort of in between the bid and the ask and maybe inch it one way or the other, depending on what side you're on, if you're buying or selling, you'll get filled in a reasonable area there. Especially on a stock like Adobe. This isn't some obscure stock. This is big time. All right, rather than look at the side-by-side view, let's look at the stacked view. And let's just get vertical on these bad boys. So $7 is what the market is pricing in. So $7 to the upside puts you at the 144s. And let's just price that out just to show you guys. I like to do the halvesy, but I'm going to show you this one first. Just to get a basis, and maybe I should stop closing my calculator. That would probably be a good idea. I'm going to try to remember to not close this calculator. Okay. So the 137 call, if you're going to go long that, probably going to cost you about 448. Simultaneously shorting the 144 call, you're going to get back $1.76. That's 272 is your outlay here, right? So, and then Newman, if it did get downgraded, they didn't change the EPS estimates at all. So, to me, that's like, who cares? I get in arguments with these analysts all the time when they start getting out here and downgrading something. We saw it the other day. Somebody emailed me about it. Stock got downgraded, and their price target went up $3. It's pretty funny, and I know there's other reasons for that, but I found it entertaining. All right, so 272 is what this is going to cost. So the difference in the strike prices is $7 minus the 272. So you have 428 on 272. So you can make 150% on that. But you can take a little risk off the table. You're not going to let me do that, huh? You can take a little risk off the table, and you can do 137s and 140. Yeah, Bruno, you missed the beginning part of the video. We talked all about the tech wreck, and its effect on the rest of the market. Okay, so 137 is going to cost us 448. The 140, shorting the 140, you're going to get back 284. So 164 is your net outlay on this one. Difference in strike prices is $3. Minus that 164 is only 136 on 164. Interesting. Very interesting for me to see that. So the market wants you to be a little bit more aggressive than that. What's this chart telling us? Go back to the chart. $140s. Well, 140s in this candle here last Wednesday. 131 is the low here. So you got to figure if it gets bad, that it does get down to the bottom of this candle, right? And if it's good, probably the top of this candle. So that's 141. I mean, if it's really good, it's got to be much better. And again, we're talking about post-earnings drift, though, too, right? So it's going to catch up and get back to the highs, I hope. Man, I tell you, this Amazon Whole Foods deal is just incredible. That's a wow. That's a wow, like a wow event. And Walmart, it's your move. That was oh man, Jeff Bezos is just incredible. I'm a huge Jeff Bezos fan, and it's rare that I get wowed by a move like that. But wow, just took some chutzpah. Okay, so guys, this 137 and 140 is just not attractive to me. But I still don't want to go all the way out to 144 because, as we saw, that's an awful lot, right? Yeah, Kroger. You know what? That's kind of funny to me now. I didn't even put that in perspective. Do you think anybody knew about, any of those big dogs knew about this Whole Foods Amazon deal? And that's part of the reason why they beat down Kroger so much? That would be interesting. Of course, that's just like, my salty conspiracy theory because I was wrong on the Condor. Man, I can't believe, I mean, they beat that thing down like crazy. Okay. So what about a 137, 142? So we go long the 137 call, 448. Simultaneously going short the 142. You're going to get 236 back. So in this case, it's 212. This is going to look a lot more attractive, I believe. 500 minus that 212. You got 288 on 212. Make 135%. That I'm much more comfortable with. So I'm going to go ahead and type it here. And if somebody could do me a favor, because I don't have my chat window, our long-term chat. If somebody can either just put this into the chat for me, I'm going to say the bull debit here is long July 14th, 137, 142 call spread for a 212 net debit. Okay. All right. So there's that. Normally I have my chat up. I need to get my chat up here. Okay. Now on the put side. 137s. And we said the market said 130. And I kind of agree, but even just on the technicals, I saw that 131 wouldn't be a problem. But a little bit more on the conservative side, 132. Did I close it again? I closed it again. You know what's funny is I close the calculator all the time on my other computer, but I have a little hotkey for it, so it doesn't bother me as much. But here, I don't know what it is. Okay, so going long the 137 put is going to cost you 435. Simultaneously going short the 132 put, going to get back 269. So this one is 166. Wow. But the difference in the strike prices here is still $5. Minus that 166 is 334 divided by 166, and we've got a triple up here. Very interesting to see the disparity between the call side and the put side here. Now, we've seen this before. I'd like to keep better data of when this happens. This is one of those kind of notable things that I want to go back. When it's kind of, and I don't want to say the put-call parity is thrown off, but when the sort of with the same risk parameters on the put side, it's way more attractive. You get way more risk versus reward than on the call side. I think that's bullish in general for the stock, right? But this is something to note, actually, and go back and look at in the future. So I'm going to say the bear debit is long July 14th, 137, 132 put spread for a 166 net debit. Okay? And that's some serious bang for your buck there. Okay. So, I always go back to the price consensus and EPS surprise chart to make my final determination on if I'm going to be bullish or bearish on a stock. And in the case of Adobe, I'm on the bullish side of this trade because it's hard to fight this earnings trend. On the same token, though, I have a market that's oversold. Adobe's oversold. The Qs are oversold. Somebody told Mr. Newman's telling me that the SPY's starting to fall, and he's right. Back to the Qs again. The Nasdaq's. So this is Nasdaq 100 pretty much, right? To the Qs. 137.47. That's the area to watch. 137.47. And that's today. If we get back down there today, if we get below there today, that's no good. This is one of those weeks where it's like, thank goodness that the weekend is here. Because if it doesn't break down below that, I think we're going to be okay. VIX should be way higher than 11 right now. It's just incredible what happens to this thing. And just the lack of movement in the VIX. It's just insane. Just nothing doing. Ain't nothing doing here on the VIX. You would think with the Nasdaq where it is that the VIX would, Now, granted, oh yeah, AJ, not just OPEX, it's the quad witch today. So they're gonna hold it. They're gonna hold it. They're gonna hold it here. I think they're gonna hold those lows, no problem. With the quad witch for sure. So, overall, I mean, this is not a good pattern to see, right? You don't want to see the drop and then the triangle. It's not what you want to see. So, I'd really like to see some strength out of Adobe, and you're not going to get it until earnings. Without earnings, this is looking at this is a bearish situation. Sure, we can look at a couple of things. I got a few minutes here. Ulta. Man, look at these bad boys. Coming all the way back. 296. Are they gonna they're gonna test this 50-day? That's so interesting to me. This push higher and then just exhaustion. It just ran out. It just flat ran out of buyers. Is what happened. Ulta might be coming back down at 289 now. I mean, here's where this is where it is. This is the magnet that's calling it right now. So they may, and look at what's happened. Wow. See, this gap, the gap messes up my money flow. It's frustrating that I can't, anytime you have a gap in your chart, you can't use the money flow here. It's annoying. Just the way the math works, it just throws it all off. Very oversold here on the commodity channel index at negative 148. I mean, that's very bearish there. Just like to see that tick up a little bit. But yeah, Ulta's been getting pounded here. 288s, I think maybe that'll hold. And now let's look at Costco. Whoops! Oh, man, what did they do to Costco? Oh, man. Hey, guys. You got your trading hats on today? Because Costco, yeah, the buyer, they came in and they got it. Guys, short-term Costco options here might be fun. This might be one of those things. These are those dice rolls. The day of dice rolls at OPEX. The thing is, I think this is going to... Maybe this tests here and then starts to go lower. Let's see how cheap these options are. How cheap? Let's look at Costco. What happened? The Costa Rican cologne? I don't want the Costa Rican cologne. I want Costco. Well, now I know. Now I know what to use if I go to Costa Rica, right? How cheap are these bad boys? No way it gets down under this low. That's true. Best Buy and Amazon. I'm not even thinking. Man, the Amazon ramifications are crazy. Last night. I was at on Southport here in Chicago, and there's an Amazon bookstore on Southport. They're slowly taking over. Who knew? 169s. 169s. These might be a little bit. You gotta wait for the. Oh, where's my VWAP? VWAP. What's a moving VWAP? Huh. Probably something. Oh, it's on the positive side of the VWAP here. I would wait. I'd keep an eye on this until the next time it comes down to the VWAP, and if it breaks the VWAP, I'd be looking at these 168 puts. If it breaks the VWAP, see where they are. But if it bounces at the VWAP, pretty much on the flip side on these 168 calls. That's what I would look at. But this is the thing, though. I don't know that they're going to push this thing much further in any direction, though. Just wait for a test of this and see where it goes. Yeah, it's different when, you get some Amazon news versus an overreaction to earnings. It's easier to play the strategy when there's like a huge overreaction to earnings in like the wrong direction too, than it is to just say, oh, they're down on the Amazon news. Maybe it's an overreaction, but the whole market starts to go south. I just don't know how much this is going to move. But I think you fade if it gets into this gap. Why did it gap down? I mean, there's no reason that they're overdoing it. I like to see the volume on this. This is an interesting story that's developing that I need to do a lot more research on. This is going to be entertaining. I won't have time this weekend though. Frustrating. Anyway, all right, guys. I got to get up out of here. Keep an eye on this Costco thing. If it gets back to the VWAP and bounces, it could get up in this gap throughout the day, and that would be good. I think fading this move is going to be the idea here, short term here on Costco. So looking at some of those calls, I think is going to work. Out of the money Amazon call spread. I don't want none of that right now. Because if you get the NASDAQ recovering, right? I mean, your strategy is great if the NASDAQ kind of stays where it is and metals about. But if the NASDAQ starts to recover, and I don't know if you meant out of the money call spread like today, or if you're talking further out. So, all right, guys. Anyway, thank you so much for hanging out with me here today on Zach's Live Trader. Next week, remember, Monday. Yeah, one day that might be maybe. Yeah, Newman, that's fine. Yeah, I'm with you on that. Monday, I believe we're gonna do FedEx because they're gonna report after the bell on Tuesday. This little format wasn't too bad. I'm gonna try and get my ZRS system on this computer so I can go back to my my G14 classified stuff. And we're just gonna kind of go from there. So everybody have a fantastic weekend. And I will see you all next week. Have a good one.